Hello, Warriors. How's everyone doing today? We had a lot of reversal action yesterday, some of it sticking, some of it not. So, how you doing today? Sinatra and Glenn came in. Hi, came in, and Ryan are with me today. AJ, how are you? Mike, buy Bill taking all chips up. Okay, yeah, I saw in the video up big. Uh, hey, Brand, James, Will, Timothy. Okay, so I'm going to pose this question to the whole team. Oh, Greg is here today too. I know what his answer will be, but I'm glad he's here. So let me ask you this, everyone who's here. Um,
Hey Dale.
hey, hi, Grega. Do you guys believe that yesterday's reversal and the dollar will stick? That's the question. So here's the dollar. Uh, we took out. Someone's given me a lot of feedback. I think it's you, Grega. Okay, so we took out the low by about 20 here before this reversal. So give me your verdict. Not
I
yet.
think I think that there are a lot of stops on both sides of the yesterday's price action. So maybe market has to clear this out and before it will finally reverse to the upside. So I don't rule out the potential retest of that lows, but I would not be expecting any major new push to the downside. But if we see a daily close or even better a weekly weekly close around 98, then I think that low is in.
Okay, so yesterday's action took the 95 uh, number off the table. Plus, can you still call this an ending diagonal? It didn't
Yeah.
break. It still could be an ending diagonal.
Yes, and maybe, as I said, maybe we already are closer to the lows, and or if 98 is out, I think that low is in of that fifth wave
Okay.
that we've
All
been
right.
looking for.
I'm glad you came to clear it up. Also, something that Grega talked about and I've been talking about for a while was looking for a floor in yields around that 4% level. It was pretty classic, three drive to a bottom formation. Look at this, take it right out of the textbook. So that means I think yields are heading a lot higher. If it's a triangle, you're short gold. Okay.
I
Yeah,
think
that
we'll pull back.
pull back in gold. Yeah.
Yeah,
Okay.
it's
I
it,
think so too.
it's really interesting how firstly US yields came quite sharply to the downside last
Right.
week. Dollar
Yeah.
was still waiting for that drop, and now
Yeah.
this week yields somehow stabilized when dollar finally catch this move to the downside.
Yeah. Okay. So and now yields are look like they're headed up. Could this be a major low in yields and not just a bounce, maybe back to, 420 in the bigger picture? Are we looking at yields rallying back to, 470 and maybe
Well,
breaking out? I mean, this would be the surprise of the century,
yeah,
even though I think it was a hawkish cut, that maybe we're in an easing cycle, and was what happened in the last one, right, Grega?
yes.
Okay, so maybe if we get something comparable, it could take us back up to the highs here at 470, and if we break this triangle, um, I know guys talking 6, 7.
Yeah, I have slightly different triangle, but if you'll connect your lines from summer of 2024 and 2025 lows, we are
Okay,
just at this trend line. So I just think that it really depends how we finish this week.
okay. Um, Also
This
the
one.
bond, that's it, right?
Yep.
Okay,
Yes.
so we went through it a little bit. So if we break out to the upside, you have to take at least the full length of the formation, right? Which would be like 470 to 3.5 would be 120 on top of 470 gives you 6% yields.
Yeah, pretty aggressive move to the upside. I mean, market is certainly not positioned for this. So
No,
if we get this kind of surprise, the move could be really interesting.
okay. Do you have a preferred short with the dollar? You thinking the dollar is bottomed? Is Aussie a better short than Euro at this stage?
No, I would leave Aussie and let's see how the dollar finishes. I mean, if dollar would still show me some bearish movement by end of the week, then maybe, as I said, if dollar will print new lows. Aussie, in my opinion, is still at a good levels, interesting levels here. But if dollar would turn higher towards 98, I would be looking to short euro dollar on rallies.
Okay, so you want some confirmation first.
Yeah,
Because what bothers me about the euro compared to others is, before the spike, we had a lot of momentum. We had over an 80 reading, which would be an unusual place. It'd be unusual for the market to top and just head straight down after momentum like that.
yeah, there's no divergence, right?
Yeah, that's true. Yeah, that's a point. So maybe we do need another trip up there. Um,
There must be
Kurt
a lot
Bell.
of there must be a lot of stops above that spike.
Yeah. Well, and they got the majority of the stops the day before by taking out 1830, right? That was the high in July. And on the daily, we have divergence, just like we have on the daily and the dollar. This is a new low, and it's a second divergence. Here was the first. Here's the second. No, this is the first, rallied, and at new lows, we bottomed. The only thing that bothers me, if I was just trading over the day on the daily, I'd feel okay about it. But it's the same like with the euro that, we had a confirmed low down here going into the spike. So I don't know. There sure are a lot of dollar bears and an awful lot of people waiting for 95. So to me, I think it's possible that the lows are in and people be waiting for 95. I know there's some guys here like Kurt saying we could that's down the road probably, Kurt. I think we could go to I can see 80, but can't you see 102 first? Anyway, just something to consider. I just want to show one thing that I want to get the guys in, the other guys, and it's the beauty of technical analysis. And it never ceases to amaze me how some of these counts and waves and everything, how beautiful they work if you follow them, and how the news actually, happens after you get a technical signal. So you guys know I've been bearish Uber for a long time. Okay, I could go. I haven't been right. I haven't been wrong. I've made money. I've lost money, and it started here because I was looking at this was being a third drive. Okay, so had that initial break, but in the third, look at the third. Within the third, which we're having a pretty ugly week, there are three. One, two, three. Okay. It's a fractal of it. But the interesting thing is it made new all-time highs right here. And when you trade a three drive, I do it, but I wouldn't do it at home. What's your trigger? Okay. Your trigger when you trade a three drive is to know it's not going to blow out the divergence, at least have one red candle when it's a 3 drive to a top formation. So this was actually the signal the day before yesterday. And then that news was released about Waymo and Lyft teaming up and some regulatory problems. And this was yesterday in Uber. So, interesting. The day before the news broke was the trigger. So when you trade these 3 drives, you wait for the candle to close. If you're using it daily, you have to wait till the end of the day and then place your stop above the trigger, not 1 pip above it, because sometimes it could play in an area like, here. But anyway, it just was kind of amazed me again that bad news came after you had a technical signal. That's the point. Um, so let me bring in Ryan and Kay. Hi,
Morning,
Ryan.
sir.
Hey, how are you, buddy? So, what a reversal in yen, and where are you at? Is this the bottom in the dollar?
Uh, no, I can't call a bottom in the dollar.
Okay, okay,
Um, the last 2 weeks has been building up for this moment. The market's reacted. Now it's going into what next mode. It knows what the Fed's doing for the foreseeable future. We go back to watching data. If the data continues to deteriorate, if we see jobs really crunching lower, then the dollar bottom isn't in, because then the market's going to get more dovish than it is now. So the Powell and the Fed have made a rod for their back now by not being as dovish last night, because now if the data, as I say, if it does get worse, then the market's going to think, well, you're going to have to do even more than what we thought you were going to do yesterday. And then you're going to get a reaction to that. But for now, yeah, I think things are more balanced for the dollar.
okay.
We've had the
All right.
reaction, we've had the counter reaction, and now we're going to probably see a bit of consolidation moving forward.
I was looking for 45 in the end. I talked about it for a few days, so it didn't get down there, but that was a
Yeah,
pretty wicked turn at 5.5. I don't think I'd be uh, even. What would happen if they cut rates tonight
you mean raised
to the
rates?
end? Huh?
Yeah, if they raise rates, then we're going to see a reaction.
Okay.
But the expectation that they don't do anything at this meeting, the risk isn't zero, but it's very low. The risk is what they might indicate they're going to do in the subsequent meetings. But even so, they're not going to say we're going to raise rates by 200 pips over the next 6 months. We might get 1 or 2 cautious hikes, maybe more, depending on the data again. So I don't think the yen is going to get, scream all the way back down to 145. But we could see a
Right.
reaction. I think from this point, talking just dollar yen, after the Bank of Japan, we're going to switch focus more to the yen side of things and what's going on with that leadership election.
Okay. Would you buy breaks now and be wrong under 5.5?
Well, I'm already long, because I
Oh,
didn't
okay.
believe that crap that we got from the Fed yesterday, so I was long.
Oh, nice, buddy. Because I know
Yeah.
you covered your 48 shorts
Oh,
before the Fed.
I closed those up, and
Right.
yeah, I just saw that reaction last night, and then I read all the other details, and I was like, why is this market selling bucks here?
Yeah.
And then I was like, no, I've had enough. I'm buying it. So
Yeah.
yeah, got fortunate with that one.
A hawkish cut.
Yeah, hawkish, undovish, yeah, whichever way you want to call it.
Mhm.
Not what the market was expecting, and we were saying Monday, Tuesday, when the dollar, saw the last bout of selling off, that the potential for a reversal was there, and we got that. So yeah, I think the market now is in reflection mode. What does it need to do now? What's it going to take for the dollar to get sold off heavy again?
Yeah, I would think that I just don't see, I was thinking even in gold for a correction, right? Um,
Yeah.
and the dollar, you're thinking, well, what could possibly bring gold down. And, some people are saying peace with in Ukraine. To me, it was, you need a dollar rally, even though people say, well, the gold and the dollar could go up together. Yields, something to compete. Even though gold has performed great, it's not the same value. It's if yields are going up, and we've had an enormous price move to the upside, that could press the reason, and that could be the reason for gold to have a correction, is yields going higher for a
It could
while.
be. It could be, but I think gold is just out there on its own. Yeah, it reacts to dollar moves, it reacts to the Fed like everything else. But the underlying reasons why we're trading up at 3,700, 3,600 are really nothing to do with geopolitics or Feds or central banks or anything else.
It has to do with not wanting to own fiat.
Maybe, yeah, but
right?
There's more than one reason. You can't, some yields you can point at and go, well, that's rates and that's fiscal matters and debt and all that sort of thing. But gold, a bit like stocks, we got a rate cut and an extra rate cut this year, and stocks are moving back up to all-time highs, isn't it?
Yeah.
Undovish, isn't it supposed to go the other way? But
look at where it held. So there's technical analysis 101 as well. It came all the way back to the throwover, and that's what it rallied off of.
Stocks are in a what? Is this a 30-year bull rally? We've whatever it is, we've come through pandemics, we've come through crashes, we've come through president changes, we come through everything, and it still goes up. So that's all you need to know.
Okay. All right. And actually, we're outperforming Europe. Remember, that was a fashionable trade. Was buying the DAX and everything else. I haven't looked at emerging markets. I think China's still outperforming. I don't know the other ones, but the DAX hasn't made a new high in quite some time. Does that mean anything to you, Grega, about the dollar possibly? That Europe isn't performing the way it was, I don't know, about 3-4 months ago when it was outpacing the US dramatically?
Well, if the US stocks will maybe continue higher, I just think that German DAX will still stabilize down here at this low range from summer. So basically, I still see this retracement from the highs as a correction. You can clearly see how a lot of overlaps we have here, and I don't believe that we put in any kind of important high.
Well, I'm not talking about a directional call. I'm talking about a relative performance call. What has changed? Like for the last 6 months or better, it was outperforming the U.S. And now the U.S. has been blowing it away when everyone's saying diversify out of the U.S. because of the dollar, right?
Or because if markets believe that the rates will go lower in the US, gets money cheaper, then of course that could be more attractive stocks in the US. Okay. And technology sector there is much more stronger and interesting compared to something in Europe.
What's your upside target in SPX now, Grega?
On the SPX, let me just open the chart.
You want to show up? Okay, man, I know you're here. I'm going to get you, buddy.
Let the important people talk first, Dale.
Oh, you're so humble.
We'll close with a joke and a song.
All right. Okay, so getting closer to where we could have a 4.
Yeah, I would be eyeing this upper channel, parallel channel here around 6,700. What is maybe the most important here from that low is that we have these 5 waves up from here. So yesterday we got this spike down and reversing back to the high. So it looks like that maybe some stops were cleared up there. And what caught my attention yesterday is that here's the S&P 500 cash market. So you can see that in this recent recovery from basically from start of the month, each time when we have seen this gap on the cash market came to the downside and it filled these gaps. And later on, it resumed higher. But notice that after yesterday's spike down, we haven't filled this gap from Wednesday, from Thursday, September 11th. We came very close to it, but not really filled it. So in my opinion, this one is still open at the downside. So I assume that once we will now open higher, that we could later on still try to fill these gaps on the downside. And there must be also a lot of stops, I believe, below that spike here as well. So on
all the
dips,
spike lows.
on the intraday dips, I think that this could be very interesting support if we get this kind of a retracement, which
Wouldn't it be a sign of more strength that it couldn't fill the gap and it doesn't have to fill the gap? The other pullbacks filled the gap, but maybe.
Yeah, but I hear you. But when I look here back, I can see that all that in most of the cases, those gaps were filled. And now if I have to also maybe add wave count to this kind of approach with these 5 waves up, then even just a temporary free wave correction can cause this fill. And if you also look at the big picture here, I have all of the major indexes, and I can see that all of them can be finishing this extended higher degree wave free. Of course, it's still a bull run, and I'm expecting more upside on stocks. Stocks always move to the upside, but of course, something on retracement or some retracement maybe we should watch for and just not be surprised if we get this fourth wave here over the next maybe 2 months or so.
Okay, I'm gonna.
And of course, it would be much easier if the dollar would really, for these corrections to unfold, especially if the dollar will give us a confirmation that is bottoming, right?
Right. So that should be part of the equation. All right, thanks, Grega. What's your wave count on Uber? I know you probably don't even
Uber.
follow it. Uber.
Ending diagonal.
Huh?
I saw small ending diagonal at the top.
So it's finished.
Well, maybe I'm wrong.
All right, well, let me know, okay? I'd be interested. All right, I want to talk to K-Man now. So K,
Sure.
I'm sure. Thank you, Greg. I'm sure. I know your style, but we were watching this stuff and saw things starting to reverse. What did you jump on?
Well, what did I jump out of?
All righty.
I was long Aussie and short dollar mix, and I covered both. Well, dollar mix is a bit uncooperative because it didn't rally high enough to get back short. But yeah, the Aussie was a pretty decent trade to get out of. But no, I was actually, I'm going to say honestly, and I said it in the flow show too. Ryan was a lot faster to react to the undovish tilt of the Fed. So, but what I did do was actually buy euro yen, and because stocks started to rally again, and I don't think the Bank of Japan will do anything today. They will be waiting for the LDP election to be over, and then maybe next month or so add another quarter if it's still warranted. No, I jumped very late on the dollar yen as well, because you were talking earlier about what currencies could perform the worst against the dollar if the dollar continues to rally. I think yen is for sure a candidate. The other one is the Kiwi, because that got an absolute slap around the ears overnight because they had a very awful Q2 GDP revision.
Wow, look at that Aussie yen.
Much deeper. Yeah, Aussie is
Aussie Kiwi, I mean. Yeah.
No, but Aussie is the one. Oh yeah, Aussie Kiwi. Yeah, yeah. It absolutely shot up. Even though the Aussie employment report wasn't good, but the Kiwi GDP was awful, really. And so if you talk about those who would be most vulnerable if the dollar continues to rally, I would place yen and kiwi now in on rather the top of the list, where stuff like euro and Aussie, the way they have behaved of late, maybe one of those who hold up relatively well compared to some others. That's how I look at things right now. I'm not in Aussie or in euro dollar positions. That is not something that I'm looking at. For the viability of the dollar move, and I know it's early, and I'm going to get yellow or even red carded in our FA community, but I'd be very careful when we move into end of the month, because looking at how the equities have performed,
Yeah.
we have end of quarter. I would not be surprised if all of a sudden, from what level I don't know right now, but the dollar weakens a bit into month end, because really the U.S. equities, as you were rightly pointing out, have been outperforming the past month at least again versus European assets. So I'd be a bit careful with the dollar. And really, in the long term, I don't think that much has changed yet. But I would not rule out in the meantime that it does pretty well, though, because Powell was really not dovish at all. It as I was saying on the Flow show, Ryan already red carded me in
You knew it was coming.
Yeah.
no, it's yeah. It just felt like I need to fight something here. Kind of press conference yesterday, because
Yeah.
brushed Miran's 50 BP's vote off the table, brushed the
Yeah.
importance of the dots off under the carpet as well. So I think we will have a few days at least of dollar recovery stability. But then I'll be cautious into month end, quarter end, And your question about gold, as Ryan already mentioned, I've been saying so often on all the shows, take away monetary policy bonds, all the other factors, all the other reasons why gold is holding up are still very much there. And then I am talking about,
Well, they're going to be there even if the market tops.
yeah,
Yeah,
yeah.
I mean, to me that it's not an argument you could use forever. So
No, but
what would have to change?
it's an argument
Um,
not to fight it right now.
okay, what
Imagine
would have to change? Yields, the dollar, yields in the
yields,
dollar.
yields could be one thing, because obviously gold only partially to me, has benefited from those lower yields. But for the rest, and as I've been saying so often, it's a hedge against everything that can go wrong. Call it geopolitics, call it debt, call it inflation remaining too high, and a potential of a weakening jobs market. Imagine that we get another weak jobs report out of the US starting of October. Where do you think gold is going to trade? It's probably going to be new highs. But if you look at it from a technical aspect, I think if you start to move below 34.5, 35, 100 on gold, then that could be the end of this party at least.
Yeah, 3,400. Yeah. Okay.
34 35 is my big level right now. It's been gradually moving up.
Do you get anything? I know that Grega follows this. Grega gold silver ratio trying to bottom. Um, Still lower lows coming.
You're
If
asking
you're
me
still
already?
here. Well, do you follow the gold silver
Yeah,
ratio? Okay.
I follow it. But I
Yeah, but it's hard
can't.
to have a view, isn't it? It's kind of
For me, it's very hard, because we are back at early 2025 levels, and it's very strange. But if you just look at silver, it's bouncing from already very early supports.
yeah,
Every time you go to mid-low 41s, it's already bouncing, which is far too high to bounce from if we want to see a correction. If you
yeah.
get what I'm trying to say.
I'm hearing gold may have peaked, but silver has more juice in it and could trade to $44 or so.
Yeah, because there's the demand factor as well. Unfortunately, is to be said, silver being an industrial metal, the more they send drones flying to each other, the more they are going to need silver as well.
So that would imply that this gold silver ratio
Boys,
is
we got
going
data.
to break down.
Yeah.
What we had data?
Yeah. Claims
Initial
are back
jobless
to normal.
claims came out 231.
Back to normal.
Yeah, versus 240 expected. Continuous jobless claims more or less remaining the same at 1.92 million. The 4-week
Manufacturing.
average remaining the same, roughly at 240. And Philly Fed manufacturing index. What the hell is this number coming in at 23.2 versus 3? Is that a mistake?
No, 23.2 versus 1.7 expected. So it went the opposite way to Empire. So these numbers are a little bit volatile at the moment.
I mean, yeah, this is like an extreme number.
Yeah, prices paid though dropped massively to 46.8 from 66.8.
Yeah, that's good news. That's actually good news.
Yeah, well, depending on the
Silver is
viewpoint.
coming off.
Yeah, employment a small down change, 5.6 from 5.9 prior. Yeah. Oh, big drop in prices received as well. 18.8 versus 36.1. So
Probably
yeah,
while
soft inflation.
while they are happier in the index because the prices are collapsing.
So with this news, 10 years popping, looks
Yeah,
pretty
dollar a
good.
bit better beat. 10's about 1.5 BP higher. Twos
Dollar
are
is a little bit higher following the data, yeah.
Yeah, Aussie weaker.
Equities
Okay,
retaining most of their gains.
Okay, Steve, your thoughts on the Fed before I go to Pavel for the interview? Just a quick
It is
synopsis.
more than obvious that the market had set its expectations probably for a little bit more of a dovish shift. I mean, nobody was expecting a 50 basis point cut, but
Some
I
were.
assume they might have hoped for more descendants.
There were
For
six voted for no change in rates.
yes, and to be honest, I've said it before.
I
We think.
voted for a hike,
Oh,
half a
you did?
point
Okay, that's
for
what
a
I would
half a
have voted
point.
for.
Yeah, half a point, so I could buy gold at 3,000. Anyway, I always have an ulterior motive.
You always have an underlying motive, yeah.
I'm a sneaky guy.
You
Anyway,
sneaky guy, yeah.
good to hear your voice, bro.
Good
And
to be here, and of course, I'll do the morning edge afterwards, so we'll have
okay,
plenty to talk about with our subscribers.
yeah,
We'll do the bias chart, our daily levels, and have more time to discuss about how we're moving forward from here. I don't want to eat time from your interview,
okay, buddy.
so I'll talk to you again tomorrow.
All right, thank you, Steve. Grega, thanks for dropping in, buddy, and let me, interrogate you. And as always, Ryan came in, the dynamic duo. You guys were the missing piece for us to be the dream team.
The missing
So,
link.
oh yeah, that's what I've been called that before. So anyway, guys, good hunting today.
have
Thanks
a
a
good
lot.
interview, Dale.
Thank you,
Thank
buddy.
you,
And
mate. Enjoy your interview.
and we'll wrap it up tomorrow, TGIF Dream Team. Thank you,
Indeed.
guys. All right. So Pavel, how are you, buddy? Good to
Hi,
have you
Dale. Do you
back.
hear me?
I hear you loud and clear.
Great.
I'm gonna stop sharing. So I'm always interested when you come in what your stuff is saying. I think we had agreement on corn around the bottom. I think you liked that one. I don't know where you're at on other things. I think you, like a lot of people, had some premature bearish signals in S&Ps. You're one in, millions of people do every day. Why don't you take it away and see
Sure, sure.
what's on.
Yeah, I just have to hide this Zoom panel somehow. Hide floating meeting. Yes, that's it. Do you see my screen?
Yes, I see iron ore,
Yeah, cool.
crude. Is this like this is your watch list or
Yeah,
tracker?
exactly. That's my watch list because today I want to talk about uh, mostly oil, but also yields, the bond market, because I think that's really crucial for everything we are seeing right now, both equities, precious metals, even crypto, and so on. And you were spot on that. My Bayesian model for the S&P 500 turned bearish prematurely, which it usually is too early when it comes to tops in the stock market because the tops are a process while the bottoms are usually an event. So I think it will all come down to the bond market. And I also have been following you and your research, watching your videos. So I know that your target on 10-year treasury yield was 4%. And I have a similar target, a slightly different one, but not at 10-year yield, but on the 30s. I'm
Okay.
more focused on the back end here. And I think the defining threshold for me is at 4.5%. And I think a major regime change in the markets will come once we reach this threshold. Of course, I'm making this up, so this is not artificial boundary. There is no reason why it has to be exactly 4.5. But similar to you, you had 4.0 on 10-year. I have 4.5 at 30s, and we are still above it, trading at 4.65. And I think before the dollar bottoms, before the gold tops, and Nasdaq tops, we will reach this level. So it implies that there is still some gas left in the rally on equities and on gold and so on. So
Because rates are not heading up yet. They still have a lower levels to go, which is adding fuel to
yeah,
risk. Okay.
exactly, exactly.
And then we get to 4.5. That's your floor in the 30. Is it possible that since we've been having steepening, that the 10-year doesn't do much and the market interprets the hawkish cut as still being behind the curve, and that the steepening heads back towards inversion until the Fed gets more aggressive, and maybe the front end rates go up faster there than the bonds, which has been the opposite of the last many years.
Yeah, it's certainly possible that the 10-year will be more resilient, and it's quite possible. It's difficult to
So
uh,
where would this put TLT at your yield? Do you use TLT as a proxy for bonds?
No, actually, I
Okay.
don't follow TLT. I follow the
The
bonds,
futures. Yeah.
the futures. Yes, the bond futures. But I think the yield is the most useful indicator because unlike the technical analysis on whatever underlying you wish, which is more of subjective witchcraft, the yield actually matters. Many institutions and even sovereigns follow the yield, and that's why I prefer to target the yield instead of some level on the bond futures or even some derivative product like the ETF. So that's why I
Okay.
prefer to watch the yield. So
Okay.
that's my idea going forward. We can see a bounce here After dropping to 4.6, we can go to, I don't know, maybe 4.75 to 4.85, somewhere around here. So some kind of bounce, but in the coming days. But ultimately, my expectation is that we will drop even lower towards 4.5. And once again, this doesn't have to be a precise level. It can be, area around 4.5. But the point is that I think we haven't seen the low in the 30s in the yield yet. So that's what I'm looking forward, and it has a lot to do with oil, energy, commodities, and everything else.
So
I have
bearish oil, deflationary keeps the bond rally going.
Yes, yes, exactly. Exactly. And I don't know what will be the catalyst for the turnaround because the market always leads. I don't know if maybe, and that's just my, guess that the economy will turn out to be more resilient than the Federal Reserve currently expects. For example, the labor market might turn out to be stronger, inflation more sticky. So I don't know. We'll find out in the retrospect. But the point is that, as you said, it's all connected. So here I highlighted the last time we spoke together at the beginning of July. I was somewhat bearish on crude oil. And this was the right call because back then everyone was expecting higher inflation and higher for longer and so on. So that was correct. And right now, I think we are going to bounce a little, as I said, because oil is ultimately correlated with yields. And once we bounce, then I expect the rally in oil to fail and drop, somewhere around here. This is the support level I draw, but once again, it's still an artificially picked level. In other words, I made it up.
Okay, can you draw a trend line on that chart from the high on the um, invasion or the airstrikes from the US back in June? Draw a line there and then to the next peak.
Yeah, you mean this
Well,
one?
yeah, or yeah, something like that.
I prefer to watch the December contract because it's the most liquid contract and of the year, and that's why I picked CLZ 25.
Okay.
So I expect
They
the
all look
bounce.
like that.
Yeah, I expect the bounce to
68.
to somewhere around 66,
Okay.
67, and then drop below 60. Below 60. I don't
Yeah, you're
know.
looking for 50, aren't you?
Yeah, for high 50s.
Yeah. Okay. All right.
So
Bearish oil, bullish on on the interest rate futures. Uh, what else you doing here?
But once we drop below 60s, I think oil will make a bottom, a medium-term bottom. And there are a few reasons why I think this can happen, but one of the strongest arguments for a turnaround in oil is the strength in the products. Here we have the 3-to-1 crack spread, the US crack spread, and you can see how strong it's been since this entire consolidation on oil. So that's one reason. Even the cracks in Europe, like this gas oil crack spread, has been very strong. So that's one of the strongest reasons for the rally on oil, and I'm completely aligned with you in this view. I just expect one more low, which is a low confidence prediction, but as I said, it's based on my outlook for the yields.
How about
But then,
nat gas? Are you watching it?
yeah, I'm watching NatGas. I was also commenting on NatGas on our Twitter channel or our X channel or whatever. And I don't know. What I don't like about nat gas is that I want to see the strength to come from Europe. And you can see the TTF interdelivery spreads here, and they're still rather weak. So that's not encouraging. Yes, there will be a rally on nat gas at some point, but I think uh, there will be a better setup later in the autumn. I don't know, October, late October, early November, when the models for winter will start coming, and maybe if they show colder winter, then this will freak out the traders and they will pile into nat gas. Who knows? But in the very short term, I don't see the setup right now. But of course, I'm bullish nat gas in the intermediate term and very bullish in the long term. But in the very short term, the setup is not there yet.
Okay.
So that's it. And by the way, I have another chart here, which is also the reason why I think there will be one more leg lower on oil, because this is the gold oil ratio. It's actually the ratio between gold and Brent crude oil, but it doesn't matter whether it's Brent or WTI. And I think the oil will bottom together with this chart. Actually, when oil bottoms, this chart will top, this ratio will top. And uh, this chart currently doesn't look like it wants to top. It's still consolidating around the previous high, which implies a break higher, which means oil lower and gold higher. So that's another reason why I think there's more gas in the tank for gold and one more drop for crude oil. So that's another argument for my very short-term bearishness on oil. I don't know how quickly it will play out. It can be days, it can be 1 or 2 weeks. I don't know, but I'm looking into a very short-term horizon. And of course, I could be wrong because every short-term prediction is inherently dangerous. So that's about oil. And by the way, one last chart about oil, because my favorite indicator for spotting major bottoms on oil. It's the commitments of traders data, but not the net positions, which everyone is using, but net traders indicators for large speculators, or specifically for money managers. And whenever one of them, either Brent or WTI, or preferably both, drop below zero, that's a signal of a major bottom on oil. Because, for example, in 2020, they dropped below zero, both of them in March during the negative
Right.
pricing period, and in autumn, in October, when I turned bullish and called energy the major opportunity of this decade. And we had, if we get back into the present, we had a negative value on Brent on this indicator in April, around the low from the end of April. And I think, well, I'm just speculating here, but I think we will get another negative reading either on one of those or preferably both, but it is more likely on Brent before crude oil bottoms. And keep in mind, this is the data harvested on Tuesday close and published on Friday. So we can get the message with some delay. Keep that in mind. But this is my preferred, actually the best indicator for spotting major bottoms on oil. And I think we will get negative reading either on Brent or WTI or both before the major bottom on
I
crude oil.
think we have the gist that your bearish oil, your work supports it. Anything on grains?
Yeah, that's very interesting because as I told you back at in the beginning of July, I was bearish commodities or bearish to neutral. I was not overly bearish, but I was skeptical about imminent rally on commodities. And as I said, most of them really dropped. Energy has been weak. Metals like copper basically nuked. Platinum went sideways since then, and so on. The only commodity group that outperformed was agriculture, specifically grains. And I think that's a message on itself, because given the outperformance of grains during this sideways consolidation, I think it will be the leading group once commodities bottom, once oil bottoms. So I'm really bullish on grains in the medium term. We also have signals generated by a complex machine learning model, or AI, if you wish. And I think I replied or reposted one of your tweets when you turned bullish corn, because at the same time, it was sometime in August, our model flashed a long signal, a buy signal on corn. There's still a valid long signal on corn, and it's been working great. And I always say that stick with the markets that just work from the beginning, and that's exactly, or that has been exactly true for corn. So maybe we get some consolidation correction together with oil in the very short term, but in the medium term, I think the rally on corn is just getting started.
Yeah.
Our model is less positive about soybeans. There was a buy signal on soybeans too, but it turned into a sell signal recently. The signal strength has dropped, so maybe it will turn back to a bullish at some point. But it's less excited about soybeans. But I think an interesting opportunity besides corn is canola. Because the seasonality is incredibly strong starting at the end of September. It's even stronger than corn. So I don't know, maybe this will be also a good opportunity, but overall, I'm incredibly bullish grains. I completely agree with your view. And as I said, the hint for me was, or is, the relative strength of grains compared to other commodities.
Yeah, I pay attention to that. It's very important, relative strength, relative weakness. I would have to say that your work has a relative strength reading of over 80.
Thanks. Thanks.
Yeah. Well, that means you're overbought. So that if you're overbought, you're getting too many new subscribers.
Yeah,
Is that a problem for you?
no. I mean, I was wrong about many trades in the past. I was correct about others, but I'm actually glad that I nailed the macro landscape, which we publish in our research, because back since the beginning of this year, I was skeptical that there will be an imminent inflation spike. I was actually at the beginning of the year, I told our users that the opportunity of this year, the top opportunity, will be gold miners, and it turned out spectacularly well. And I was also bullish Nasdaq for the entire year. And I think we are approaching a major change exactly when when the public will embrace this narrative. I think there will be a major change and commodities will start outperforming. I don't know what will be the catalyst. Maybe, as I said, the Fed will stoke an inflation resurgence and stronger labor market. Who knows? We will find out in the retrospect. But yeah, that's what I'm looking for, and I have no idea what will be the macro catalyst, but I sense the change will come from the bond market.
Everything's about rates.
Yeah, exactly.
So we'll see. We'll see if you're right and it turns from that level you're looking at. But appreciate the calls and your looks and Pavel and your work, and best way for people to follow you and check out your website.
Sure, you can go to our homepage at spreadcharts.com, and we also have, as I said, we also have a Twitter or X channel, x.com/spreadcharts.com, where we're very active and commenting on markets every day or nearly every day. But you can also sign up for our software. You can either try it in the free version with limited data and features, or go for the full offering with the signals, full data, and also the research. So you can check it out on our homepage. The basically the core of our software of our products is the app, which you saw here, which I showcased today. We have some very helpful, interesting data, like the commitments of traders' data, spreads, and entire history of data, tens of years, decades. So you can sign up and check it out yourself. And yeah, thank you for the invitation, Dale.
Oh, look, Okan Abar's in here congratulating you. He's another contributing editor from Turkey. What country are you in again, Pavel?
We're based in Prague, in Central Europe, in Czech Republic.
Okay. What are the people on the street saying about the Ukraine war?
Most people support Ukraine. I would say majority of people. It's very different compared to Slovakia or Hungary, because Slovakia and Hungary are the two countries in Europe that are pro-Russian. And it's not just about politicians, but also the population. So
Okay.
we are more aligned with the West, with the Western Europe, and but people are more pragmatic here, and they are not aligned with Western Europe in every case. For example, people here despise the energy vendetta, the green politics, which is good. I'm glad.
Yeah.
But in the case of Ukraine, people here support the Ukraine, of course.
Are they worried about the war spreading to
No.
what you?
Maybe they were at the beginning of the invasion, because nobody knew where the Russia will stop. But nowadays, nobody's concerned about it anymore. Although it's not that far away, if you consider that missiles and drones are being fired to the targets in Western Ukraine, and also
Checking out Poland now.
yeah, Poland just recently. So I think people should be worried. But yeah, this is also different to Poland, where many people are definitely convinced that they will not allow Russia to conquer them again, like they did after the Second World War and even in the 1920s. And here it is different. Here in Czech Republic, people basically don't care. And I think that's not a good thing. We don't care about our defense. So I consider the Polish stance to be much better. So, this is just my personal opinion. But
Yeah, I know that. Okay. That's
despite,
interesting.
yeah, I mean, because Poland is definitely more vulnerable to Russia compared to us. But I think the Poles are have much better foreign policy and defense setup and defense spending.
Their economy was called like the diamond in that area of the world. That they were like they're an economic miracle. Is that true?
Yeah, that's completely true. And I was incredibly bullish on Poland many or a few years ago, when there were many skeptics, because maybe 5 years ago it was not the case, because Poland, the right-wing government, was in conflict with the European Commission because of their reforms in the justice branch and so on, and the European Commission cut some of the money from Europe and so on. And many people were bearish or skeptical of Poland because of this, because they always said that it's they are dissenting the main European discourse and
Yeah.
go against Germany. And I was bullish because I saw that their stance against immigration and warning against Russia, that this was correct, and they were very entrepreneurial. They have a
Yeah.
vibrant stock market, by the way, which is
Huh.
contrasting with other countries like not just in Eastern Europe but even to the Western Europe. For example, the Czech stock market is basically dead. There are few illiquid companies. Maybe only one is liquid, the ČEZ, the national energy company, but the rest is just illiquid. And Polish stock market is vibrant. Polish pension funds invest in their stock market, and they invested heavily into their infrastructure over the past 20 years. 20 years ago, they had no highways. People in Czech Republic were laughing at Poland and their highways. Nowadays, it's quite the opposite. They build out their highway network while we haven't built basically anything. So they
Yeah.
have come through an incredible transformation. And I said 5 years ago that Poland will be the leading not just economic but also military power of not just Eastern but entire Europe, and they will be because back in the days it was always Britain, France, and Germany. Yes, Britain is
Right.
out of Europe or
Yeah.
European Union, and I think in the future it will be Poland, Germany, and France, and Poland will be equal to these two, at least in the geopolitical sense.
Wow. I'm glad I brought up the subject. Very interesting take. And I love to hear from people that are there so we get a different perspective than what, we're fed
Yeah,
daily.
and by the way, from the market perspective, I would say Poland is overbought right now.
Okay.
They were oversold a few years back. It was a great opportunity. I was bullish on not just their stock market but also their currency, Polish zloty. But nowadays, I think it's despite their great long-term perspective from the geopolitical point of view, in the medium term, I think the Polish stock market and the entire area of Poland being a leading market is overbought. So I would avoid,
Okay.
from the market's perspective, I would avoid Poland in the medium term. But yeah, in the long term, I think Poland has a great future ahead of itself.
And in the meantime, while you're waiting for the air to come out of it a little bit, have a few pierogies, right? You
Yes,
know what pierogies are, right? It's a
pierogies.
food. Yeah, Polish
Yeah,
dish.
probably I know what you
Pierogies,
mean.
yeah.
And I
All
think
right.
I think it's a Ukrainian dish, if I'm not mistaken.
Oh my God, I thought it was Polish.
No, I
Okay,
think
interesting.
I don't know. It's from the more from the east, either
Okay.
Ukraine or Russia or
Uh,
somewhere around here. But I think
okay.
it's not Polish, maybe
All right.
Ukrainian or Russian. But I'm not a food expert, so don't take
Uh,
me
well,
seriously here.
all right. What are you having for dinner tonight?
I don't know. I don't know what my wife will will give me. It will be a surprise.
All right. Well, enjoy, Pavel. Great having you, my trading warrior brother.
Yeah, thank you,
Good,
Dale, and thank you
good
for
luck.
inviting me.
Yeah, we'll get back together in December, buddy.
Yeah, thanks. Looking
Uh,
forward to it.
all right. In the meantime, I hope pips rain down on you and all your subscribers, so that you have to, try and bail the water out of the boat because it's too many pips are flying into your boat.
Hmm.
So good hunting, my friend.
Thank you, Dale, and
All
good
right.
luck to you.
All right. Thank you, Pavel Hala, everyone. And follow him on X at spreadcharts.com. Check out his website, some interesting work, nice app, and really a good guy who cares about his people. And that's a wrap for me. Remember, don't just count your pips, count your blessings. See everyone to wrap it up for TGIF. Adios.
Bye.
See you. See you, Pavel.
Bye.
Someone ate the best in Budapest. Okay. I'm pretty hungry right